Hi everyone, how's it going? This is Chris Matucci coming to you from Atlas Property Management, and I'm making this video just to show our prospective clients and our current clients um, kind of the trends that we're seeing in the market. I've talked to a lot of you over the course of the last year, and in our year-end recap and projection letter that we sent out last year, what we were expecting to see is kind of a flattening of the rental market with the potential of a small downturn. And that has proven to be fairly accurate. You'll see in a couple of slides what we mean, but two big takeaways that we're seeing right now is properties are renting for less and properties are sitting on market a lot longer than we've seen in previous years. So it's really important moving forward that we work with our clients and future clients to be extremely proactive, because gone are the days where you could price a property, at $4,000 for a, middle of the road, 3-bed, 2-bath home here in Napa. And within a couple of days, you have 10 applicants. That's just not where we're at anymore. So I'm going to show you some data here that I pulled the other day from Zillow, just kind of showing the state of the market and what's available. So on this first slide, you're going to see that this is just the town of Napa available rentals, all types. There's 193 rentals available currently. You can see that map, and there are a lot of purple dots ranging from, low rents to extremely high, estates. So one thing that we've noticed is that the availability of rentals is much higher than anticipated and much higher than we've seen in the last few years. We've got the Braden apartment on Soskell that just did a huge expansion, doubling their size. We just had the new apartment complex a little further north on Soskell, SoCo, open up. And then we also still have Montrachet, Hawthorne, as well as a new multifamily apartment complex over by the outlet malls that's being built and getting ready to go online. And all this isn't taking into account low income properties like the one near the Braden and the ones across the street from Montrachet. So, law of economics says increased supply, there's not going to be as much demand. So one thing as we kind of project forward that we'll go over in a couple of slides is move-in incentives. That's what a lot of the multifamily buildings are doing. We tend to look towards what multifamily is doing to see kind of what's over the horizon for the single family industry. But first, I'm going to go into some statistics here about the current market. So here I've pulled from Zillow their market summary for a 2-bedroom home. So you can see it says median rent of $3,000, month-to-month change 0. Year-over-year change, we've actually gone up $25. And of that 193 properties, you'll see that 70 of those are currently two-bedroom homes or apartments. You can see some graphs here that kind of show the ranges of rents as well as demand. And you can see, they're definitely ebbing and flowing. But when you look at the median rent price over time, we had a spike during summer, which was to be expected, but we are now seeing the downturn from that. But where I really would want to point your focus is at the market temperature. Zillow is even saying that the market in Napa is cool. It's cold. It's not in a good spot. So on this next page here, we're going to go to 3 bedrooms. And this one actually shocked me when I saw it at first. So you'll see that the median rent for a 3-bedroom is $3,800, and that the month-over-month change where I've got that arrow was $400. $400 is a big month-over-month. That tells me two things. We went out of summer, school started, crush started, and demand dropped off, and prices really had to go down. Plus $10 for the year over year, 37 days on market, which is a long time. I mean, that's a month and a quarter of lost rent. And of the 193, 41 of those are 3-bedroom properties. Again, you can see these charts. You can see that the market temperature is cool. Everything is pointing to a downturn, which again, we expect this time of year, basically from school start of crush season through most of January. We know that's the slowest time of year for us here in the rental market world in Napa, but this was larger than even I expected. So what's all this saying? What this is saying is that it's extremely important upfront to price properly. Like I said earlier, gone are the days where the comps may have came back at 3,000, but we said, well, there's enough demand, we're gonna put it up for 3,500, and we had 10 applications. Most of the time these days, when we get a comp that says 3,000, that's going to be our ceiling, unfortunately, with the rate. And I'm just using general numbers. The 3,000 isn't indicative of any specific properties or property types. I'm just using generalities. But gone are the days that you would ask for a higher premium on the property, and people were willing to pay it. We are in the slow time of year. We're in an election year. People tend to kind of hunker down and wait and see what happens with an election and how they think that that's going to affect their pocketbook. So that's definitely a factor. But the trend that I'm really wanting to point out, without sounding overly negative and like a Debbie Downer, right, is that the market has moved from flat and the market is moving in a downward direction. And it's important to price properly. Otherwise, that average of 37 days is exactly that, average. So when you're pricing properly, properties are still renting quickly. But when you're not, it may not be 37 days. It may be 40 days. It may be 60 days. It could be longer. And it's really important to make sure that we are working within what the market is dictating. So one thing that we are seeing a trend of, and that is something that the multifamily industry is doing and has been doing for a little while now, is move-in specials. So I'm going to show a couple examples here. So this first slide here is from Montrachet. You can see that they have a move-in special of 1 month free rent on apartment number 244. This is a large scale trend that's not happening just here in Napa, but it's happening nationwide in the multifamily industry, and especially with younger renters, which is a large portion of our renter base. This is a big deal because they can move in, and they're able to maybe not spend every penny that they have in their bank account and be house poor for a period of time. They're able to buy some extra furniture. The barrier to entry into a property is lower. In this next page here, it's going to go even further. This is at the new apartment complex SoCo, on the northern part of Saskell. And this one, you can see that they're offering 8 weeks free on 1 bedrooms and 6 weeks free on 2 bedrooms. So obviously, very large scale incentives. And this next one here is going to be from the Braden. Like I said, they just did a massive expansion, and they've doubled the size of their apartment complex. It's a little smaller, but you can see up in the top corner there that they're offering up to 8 weeks free move-in specials. So this is very enticing, not just to younger people, but all people looking for rental property, looking for a new rental home, and especially with younger people. They tend to gravitate a little bit towards apartment complexes for a couple reasons. The amenities of having your own gym, pool, spa, and common area, and in the Braden's case, a a full-on co-working area. Those are very, very attractive. Now, in the single family world, we obviously know that single family homes also have more privacy. They have their own yard. You're not going to have the sounds of people running around upstairs. You're not fighting with your neighbor. At least, hopefully, you're not fighting with your neighbor because their dog's been pooping in front of your apartment door all the time. Things like that. So definitely, both have their incentives. But right now, we're in a market that seems like people are being extremely price conscious, and when they are moving, they're looking for the best deal possible. These move incentives are a big deal. So that may be something that we talk about with you, and other clients in the future, because as we know, 30 days on market, the loss that we're going to have for an extra 30-day extended vacancy period on your end is going to far outweigh, if we were to get able to get the property rented in 14, 17 days, even if they did get a move-in special of half off a month's rent or first month's rent. At the end of the day, you're going to be able to ask for more rent, even though you're giving away a month or whatever the amount of time is. But the really important thing when you do that is that your monthly asking rent price is going to be higher. So when it comes to the next lease and you're doing a rent increase, if obviously the market dictates a rent increase, you're going to be able to raise it off of a higher rent as opposed to just saying, hey, I'm going to drop it X number of hundreds of dollars to get someone in there now. So it's definitely something interesting to think about. But those are just a few trends that I wanted to show to our clients and let them know kind of where the market is at for the year right now and kind of how we expect the year to end, as well as the beginning of next year. One thing, that I do like to end on an optimistic note is we all know, for the most part, in the state of California, especially here in Napa, this isn't like places in Nevada or Tennessee where you're cash flowing a lot of income off of your properties in most circumstances. Most of our clients bought a nice home for themselves and their family, and they're locked into an extremely low interest rate where the money is basically free. And you want to hold on to that because it's smart, because while you may not even break even on the rent after taxes, insurance, and whatnot. But the beautiful thing about owning property where we are is that no one is ever upset in 5, 10, 15, 20 years that they owned a piece of property in Napa. Because the biggest thing is that while your rent is going to ebb and flow a bit to where you're going to make some money some years, you're going to lose some money some years, but when it comes to the increase in the asset price, when it comes to sell the property, when you're ready to sell, it's going to far outweigh the losses, and you're going to make a lot back just purely based off of us living in one of the most beautiful places in the world. So I'll leave you on that note. We are optimistic moving forward that next year, I am projecting, once spring summer rolls around, that we really should see a rebound, and I'm hoping that we'll get back onto a healthy trajectory from that point in an upward direction. So if you guys have any questions, feel free to reach out, email us, call us. We're happy to talk. 707-681-0639. Thanks, guys.